Good morning, traders. Today is July 16th. My name is Charles, and this is the Pirate Traders live stream. Okay, so earlier in the week, we had started to create a bit of a balancing area in here, okay, which is an area where the market often bounces back and forth between a range. And yesterday, the market looked below that balance. Okay, we found support. Even though we created a poor low, we did find support. The market pushed higher. And then at the very end of the day, it sold back down, made a poorer low down there, and then pushed higher once again. So there is weakness that we've left below us from yesterday. And we don't want to forget about that. We want to keep that in the back of our mind. However, I'm not going to let that distract me this morning from the potential to go long here. And here's my reason why. Because that value area, or that balancing area, what happens is if you look below it and then you pull back up inside of it, you almost always rotate to the opposite end of balance. Okay, it's very, very common that the market pushes directly to the opposite end of the balance, like within a day or two of re-entering the range. So because we're looking at a gap up this morning, that is bullish to me. A gap up is bullish, and the fact that it's into this balancing area is also bullish to me. Okay. The other thing I wanted to note real quick was that if you look at the overnight profile, it looks balanced. It looks like the market was rotational. Sorry, I zoomed in a bit too much there. But if you expand it out, you can see that they rotated down to test the lows, didn't even get down to our lows, didn't repair the poor low. Okay. And then they've just been trudging higher ever since. So that to me is very bullish. They didn't, once they tested this area down here, they didn't feel a need to keep grinding around. Once they tested it, they were ready to go higher, and that had some follow through. Okay, so that's bullish to me as well. Now, overnight inventory is 100% net, or 75% net long. So expect a counter auction, the market to trade down early in the day, a counter auction to the long overnight activity. And then because you also have the gap, you can look for the gap fill. So say the market opens right here. That's the gap right there. You look for that to fill. If the gap fails to fill, that is a gap and go scenario, which is very bullish. And you want to go long with that trade. If the gap is able to fill down to yesterday's high, and then it finds support there, that is also considered a gap and go. You go long with that trade as well. And it's only if it cannot find support on yesterday's high that you go short as a look above and fail into that balancing area. Okay, so like you got your balancing area. If you look up into it and then you pull back down, that's also a failure that would send you, continuing to the downside. Okay, so this high is going to be really important this morning to see, can it hold if the market pulls back to there. Also, today is the monthly options expiry. So a lot of times, not always, I always have to emphasize that because I have in the past said, every time we have an options expiry, the day is super muted and it doesn't go anywhere. And then we have a crazy volatile day. So we can have a volatile day, but normally during monthly options expiries, the market is relatively muted in terms of the type of range. So it tends to just kind of grind around in a very tight range. So just something to keep in mind in case we see that today. Okay, so first order of business is the gap. Will this gap fill? If so, does it find support around yesterday's high? All right, well, internals opened very bullish this morning, but they're pulling back in here. Got to give them a good half an hour or so to kind of settle in before they give better signals. Looks like the market wants to fill that gap, but so far I think we might find support there. Let's wait and see. Good morning to Bull Bear Rider. Good to see you. Rad is here. Good morning to you. Miles back with us. Yo. RK Leon. Good morning to you. Philip is back. Good morning. Chris is here. Good to see you. Nirmal. Good morning. Naif is back with us. Welcome. Design Knob is here. Good morning to you. Phoenix. Good morning. Aaron, good to see you. Watched 2 ads. Thank you. Pavel, good morning to you. The Escanetu, good to you. Good morning. And JL99. GM to you. Absolutely, Jitten. We're about to serve up a fresh plate of gap fill. Nick is back with us. Good morning to you. Overnight POC at 43.52.75. And Jitten, as far as a trend day, a gap and go. That's the great, the most high probability to start a trend day. You got the gap. If that fills and you find support, it's a gap and go. Value is higher, right? And you're inside that balancing area from before, increasing the odds that you need to head to the opposite end of balance. So a trend day to get up to those all-time highs is still very possible here this morning. But I would just caution everybody to keep in mind that options expiry thing. I'm telling you, I cannot tell you the number of Fridays where I've expected the market to have some crazy move, and if it's an options expiry day, it just kind of grinds around and goes nowhere. Okay. All right, so the gap is filled. So now the question is, can we find support in here? Essentially just meaning the market doesn't really spend much time down inside yesterday's range. Okay, so far no support at all there. That is slightly bearish to see. We're also pulling the value area lower, and we're about to pull it to overlapping to higher, which is just slightly less bullish than being outright higher. Scott went short for the open. I mean, I would say if it were me, and this is, I can just tell you what I would do. I'd move my stop a tick above the halfback here because you got this little node of volume. So if the market finds support and pushes its way up and it's able to get back through that, likely that will be the gap and go scenario. So you'd want to exit your short. But you don't want to take profits now because if it can't get back up above yesterday's high, you may have much further downside continuation. So you want to keep a little bit of risk on for the potential reward if this fails to get above yesterday's high. But I'm not a financial advisor. You do you, bro. You do you. Oh, that's okay. Okay, it would appear that it's buyers stepping in here, but it's tough to tell right now. Okay, well, it's getting a little more bearish here. If we can't get back above yesterday's high, that is a failure on the gap to gap and go. And that increases the odds that the market will trade down into yesterday's range, into this area where the node of volume is. And of course, we remember that that then pulls us below that previous value area, our balancing area. I'm actually going to call this the balancing area low. And my reason being because of the amount of volume right here and right here, right here and right here. It seems like a better location than using the lows from Tuesday and Wednesday. Mm-hmm. So getting below this level at 43.5250 would be extremely bearish to me, as that would be breaking out of the balancing area to the downside. All right, ticks are trending down. We failed to get back above yesterday's high. So if the ticks start to push below the 0 line, that will get me bearish. Okay. So yeah, that to me looks a little bearish. The sellers are piling on here. They saw that that gap didn't hold. And now they're looking to get down here and find some stronger support. Sorry, I said my mic off. Good morning, Partha, and good morning, Nata Cactus. Good morning to you guys. Welcome. Marco. The area is going to be very important. The balancing area low is going to be very important as it lines up with the POC of yesterday and halfback of overnight. The POC of overnight. Correct. Yeah. That's partially why I picked that as the balance area low. Looking around here, trying to figure out where is the area once the market pushed higher, where when it pulled back down, it found support. And that seems to be the most important area right there since we broke out of the previous balance. If the market does find support in this area, it might need to push down below for a little bit just to get down into this node, but it should pull right back up above the balancing area low. If it finds support in here, we're likely either looking at just a rotational day in this range, or we'll start to trend higher from there. If we fail to find support in this node of volume right here, that would be extremely bearish. And I'd be targeting the repair of the poor low left behind yesterday down here at 43.3250. Aaron, I will admit it is difficult to tell this morning. because of the internals. You see, what happens is when the market gaps higher, it messes up the internals, because there's like a ton of activity that has to happen right at the open, and it just kind of really like mechanically to catch up with the movement that happened in the overnight. So it's like you'll have these times where the market opens with these gaps, and then you have the internals way up here, and they need time to pull back into range just to be readable, just to like be able to tell. They're not as accurate on a gap. So like this morning, it looked like there was massive sellers piling on and the market was pulling back down. And then we got below the zero line and I was like, ooh, that's bearish. But then we pulled right back above it and basically have gone nowhere since. So I don't have any indication of whether there's buyers or sellers just yet. But honestly, it looks like two-sided trade. To me, so far, this looks like a rotational day. There's not certainty one direction or the other. So values overlapping to higher. We got a lot of support beneath us down here in that node of volume from yesterday. So my guess as of now is that we're probably going to just rotate around in this area. But we'll see what happens if this fails. If this can hold, this becomes the most likely case. If not, then you're heading down to that poor low. Boy, look at that arrow. That is not a readable arrow. Down to the poor low. Okay. I know when it's early in the morning and you woke up and you're all excited, you're desperate to take a trade, you really, really want to get into it, but there's nothing wrong with just saying, I don't know what the market's doing right now. I'll wait until I do. Okay, so now the market is one time framing lower. That is bearish to see. We also just broke through. This was acting as support a second ago. We broke through it, so now it is likely to act as resistance on the way back up. We also pulled the value area lower, so we're only barely overlapping to higher now. Internals are clearly trending lower, so we're getting a lot more bearish signals here than bullish. Yeah, I'm having problems with the website. It's crashed a couple times over the last few days. So today, once again, I'm just going to stay live on here on YouTube, and hopefully I can get it fixed by this weekend. My apologies about that, guys. I don't know what's going on. It's the app developers. They've created updates, and the updates are creating problems, and so I'm working on it, I promise. But for today, I'm just going to stay on YouTube for the rest of the day, because I can't figure out how to fix it yet. For what it's worth, Arthur, I wouldn't say it's like super bearish, right? Like the what I'm talking about with the gap filling and then finding support at yesterday's high, that's a really, really common thing. That's not like some random thing that only market profile traders know about. Everyone in the market knows about that. So generally, if it doesn't happen, if you trade down to the previous high and you don't find support, if there's an appetite for selling, it just happens very quickly. It's like it like comes down here, it excuse me, it grinds a little bit. There's uncertainty, and then like out of nowhere, it's just like boom, 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 and it just goes. Like, because everybody was watching that, waiting for that to see what would happen there. And so the fact that we got below that and we've just been kind of grinding away, to me feels much more like rotation, and we just happen to be rotating down into support rather than like, oh my God, look how bearish the market is. You know what I mean? If they were that bearish, there'd be a lot more tempo in this. They would also be able to keep the ticks below the zero line, no problem. The fact that they keep getting pushed above the zero line every time they dip below, that goes to show you when price pulls back, buyers step in to buy it. My new homepage. Uh-oh. I don't have a new homepage. My website? No, it's WooCommerce, the app that runs the website. It like had an update, and I don't know why, but ever since the update, none of the other apps that connect to it are working properly, and I don't know anything about this stuff, so it's a nightmare to try to figure it out. So I'm figuring it out, but I spent like 5 hours on it yesterday and finally just gave up. I was like, I can't. I got to go to bed. So just give another free day on YouTube and figure it out over the weekend. Okay, so again, very bearish, getting below this value, this balance area low. There is always the chance to find support in this node of volume. Very high probability of that. But if that fails to hold, you're almost certainly heading to that poor low at 43.3250. Ah, okay. Yeah, I get your point. Why does NQ always go down harder, faster than it goes up? Um, well, John, that's my the way I would describe that to you is like it's not that it goes down harder and faster just in the NQ. It's just as most visible in the NQ. But every single market does that, right? People are always much quicker to act in fear than they are in greed. So they're going to sell much quicker than they're going to buy. So like as a market is working its way higher, it'll work its way up. It'll come back down. Some people will think, ooh, let me buy that dip, but others won't. So it'll go up again and come back down. And then they're like, do I buy it? I don't know. And so it takes a while for it to like get up there because you got to convince, these people that bought here had to watch these two dips pass them by before they work up the courage to step into the trade here and so on and so forth. But on the way down, it's fear. So on the way down, they just get me out of my trade as soon as they can. And so that you don't need that slow grind down to convince them to exit because they're just like, get me out, boom, and it goes down. Okay. Very, very bearish here as we continue to push lower, picking up tempo. It's getting to be a bit of a liquidation here. The panic is setting in. I had told you guys that I was going to ignore one time framing in the first hour of the day, but today I trust it. Pushing right through this node of volume like it's nothing. That's very bearish. So whilst this feels like a liquidation break, I do think we have a trend down here. Only 26 likes with 93 people watching. Please smash that like button. Okay, so the weak L low from yesterday is repaired. Monitoring for continuation down to the poor low. Jay, I didn't see what you wrote, but no worries, man. You watching multiple live streams simultaneously? You're a monster. Okay, so the market's got to head back up and backfill some of these levels with super low volume here. There's even one with only 190 contracts. So that's all likely to need to backfill. But I do expect we'll find resistance once we do. Looks like that 20 is what held us up on the pullback. Let's see if it can support on another attempt. I didn't just say it. I said it like 10 minutes ago, but yeah. Obviously, the taper on the low is terrible here. So that's a sign the market still needs to head down there and get some more two-sided trade. Meaning you don't monitor for continuation means you don't set a take profit order. You don't say like, okay, I'm going to go short here and I'll take profits here. You just go short and then you keep watching the market and you see how much further it can go. So you watch what happens when it gets down to this poor low. Does it start to build support here? If so, then you take profits there. But if not, if it pushes down here and then it starts to come back up and have some resistance, you stay in the trade and you let it go lower to fill the gap down here. Okay, and you just kind of keep going. You monitor it for continuation until the market can't go down anymore, and then you just exit at market at that point. Donkey, why are you bringing up oil? Something exciting happening? Oh boy, mic issues. Um, Basically, Rad, it just means you don't set a take profit order. Instead, you just monitor. You just watch the market go lower, and then when you visually think it's done going down, then you take profits on the short. But otherwise, when it gets to the poor low, you wait and see, does it get down into the gap? Once it fills the gap, you wait to see, does it need to go lower? Like, you just keep monitoring rather than like putting a take profit here and then trying to re-enter another short or whatever. You just stay in the one trade. That's what it means. Man, these ranges are just going to eat up short-term traders. That taper suggests more to come? Correct, yeah. So just so you guys know, I mean it's a little bit too early to say, but I really think the market's going to try to fill this gap down here. At the very least, repair that poor low. But I mean, a counter argument would be value is still overlapping to higher. Okay, because we stretched the market so far down here, uh, it actually pulled the value back up to the opening price. So you still have overlapping to higher value, which is neutral to bullish. Um, but every other indicator, literally every single one, says trend to the downside. So we keep having these pullbacks that get instantly bought up, and one day they won't be, right? One day traders will learn not to buy the dip, and maybe that's today. Let's wait and see. Okay, printing the C period has left behind a ton. Left behind a poor low and a million single prints above. So these single prints likely to need to get backfilled here. Okay, a failure to be able to backfill them would be bearish, and that is what I think will happen. I think we'll get into some resistance up in here. We left behind a poor low, which will need to be repaired at some point. And remember, with poor and weak references, the more of them that you have, the more potent that they become. So the poor low from today is actually more likely to be taken out because there was a poor low yesterday. And that poor low is more likely to be taken out because there was a gap below that remains unfilled. So each of these references that we stack up, you start to increase the odds that at least the first of them will definitely be repaired. Okay, let's see if we get any resistance on that 20 moving average on the NASDAQ. Correct. Creating the poor low is a sign that it was short-term traders that stepped in right there. And they're doing what they've been doing, right? They're buying the dip. Every dip they've bought over the last few weeks has V-shaped its way right back to where it started. So they're still thinking that's the way to do this. Buy this dip. All right, Arthur, 43.70 for end of day. It's not impossible, But we would need to turn around pretty quick here. Keep in mind, the longer that we stay time-wise below this balance area low, the weaker the market is becoming, that it needs to pull back down lower to bring in stronger hands buyers. So if that's what you want, 43.70 by the end of the day, you need to find support pretty soon here, which it doesn't look like the market has. Good morning, Kim. Welcome. And design knob, yeah, there you go. That's why I'm so glad I prefaced it with it doesn't mean it has to, because yeah, this is not at all how an options expiry normally goes. Very, very different market. So they're doing battle here at this level, just above the poor low here. And seems like it's about the same number of buyers and sellers. So it's some two-sided trade that's just grinding around in here. Obviously, the bias is more to the downside than the upside, as there is a trend going down. Correct, yeah. Yeah, like I said, right now it feels like it's 50-50 to me, right? Like they're competing. Who's going to win, the buyers or the sellers? We just don't know. The bias is certainly more to the downside, right? You got these poor references that need repair. You got the one time framing lower. So you got the fact that you started in yesterday's balance area and pulled below. So you got way more bearish factors here than bullish. Pretty much on the bullish side, all you've got is, the ticks trying to get above the zero line, but they failed, so that's not really bullish. All you really got is the single prints left behind from the B period. The fact that the value is overlapping to higher. And, in 10 minutes, if you print the D period, you might get the cessation of one time framing here. But other than that, there's not a lot of bullish market generated information in this market. It's more bearish. So my assumption is the breakout from this two-way battle that's taking place here will be to the downside. But as they say, I've been wrong before. Okay, so the NQ testing that 20 moving average again. It was resistance the last time. Will it act as resistance again? Nav trader, not necessarily, right? Because when prices pull back, you entice new buyers to step into the market. So, for example, somebody might not have been willing to buy on the gap fill up here because they might have felt like the market was overpriced. But now it's on sale, right? Now there's a 20% off discount. Not literally 20%, but you know what I mean. Like in a store when they have like a 25% off, like, and then people who wouldn't normally go buy a carpet are like, you know what, we need a new carpet. It's 25% off. Let's go get. So when prices pull back, you do always potentially entice new buyers to step in. All right. Well, they're trying to backfill those single prints. Got those ticks above the zero line once again. Chit and poor lows are the new support. Yeah. I know it feels that way. I know it feels that way, but I promise you it's not the case. Okay, so they bounced off that 20 moving average. That is slightly bearish on both indices. And they are making another attempt at the downside here. So they tried to push up into those single prints, couldn't get in there. Next stop, poor low. Okay, so we just pulled the POC down with the D period here. That is bearish. Okay, as long as the D period high stays below the C period high, the market is likely to continue trending down. We also just pulled the value area to overlapping to lower, which is a neutral to bearish signal. So if you recall a few minutes ago, I said the only bullish things in the market was the fact that the value area was overlapping to higher, okay? And the fact that we had these single prints that need to be backfilled. So now that we've got value overlapping to lower, okay, that takes away one of the bullish signals, which makes it a little more bearish. And then with the one time framing, as long as the one time framing continues, we can't backfill any more of these single prints. So that would mean this is a change in the market. And having that change in the market happen right when we get to that balance area low is bearish as well. Okay, so the number one thing to watch right now is for the cessation of one time framing. As long as the one time framing lower continues, the market will continue to trend down. Okay. Okay, so there's the first poor low repaired, and we continue to monitor for continuation to the downside. Next is the poor low from yesterday, and then below that we have the gap that needs filling as the next potential downside target. So to answer your question, how do I know, like at this point here, to stay in a trade or exit it? You know, that's what being a trader is, right? It's trying to figure out how to make the decisions of what trades to get into and what trades to stay into. That's what the process of being a trader is. And so it's going to be different for every person based on how they trade and what they look at. For me, I'm not a scalper. I'm not looking to jump in and out of positions really quickly. So for me, I just stay in the trade and trust the one time framing. I put my stop 2 ticks above the D period here, and I just leave it be and let it keep going, because I've learned from experience that there's way more money to be made by just going short and letting the one time framing do the work for me. Just let the hours pass by and my P&L get bigger and bigger, rather than trying to fight every little, should I go in? Should I go out? Should I do this? Should I do that? So for me personally, I like to just come up with a reason to get into the trade and then stay in the trade until that reason is disproven. In this case, the reason to be short the market is that it is trending lower. So I would stay in a trade that is short until the market is no longer trending lower. The way I know that is through the cessation of one time framing. Through one of the time periods, the high of it getting above the previous time period's high. Okay? So that's how I fight off the urge to, like, should I get in? Do I get out? Do I do this? Do I do that? Why did I get into the trade? I got in because the market was trending lower, so I'll stay in until that changes. How do you spot if a market has a poor low? It is poor because it only has 1 tick from a previous level. It needs 2 ticks to be a good low. If it's the same level or 1 tick away from a previous low, then it's poor. Glad to hear it, Mudra. And good to see you, Speedboat. Welcome. We're back on the blue. So basically, my plan was just to try out some different layouts and some different styles. But I was going to keep it on the blue in the morning on YouTube just to kind of keep it consistent. And then just change it up on the private streams. But then the last 2 days I've had problems with the website. So I've been forced to stay on the live stream on YouTube. But we will next week, once the private streams start again, we will switch back to the black. And I've changed a few things. I want to try a few other things. But yeah, I'm sorry. I know it's confusing. Yeah, Philip, the reason I look at that 20 moving average on the 15-minute candles is because it is a incredibly potent signal. Almost always, if the market pushes through it, when it comes back up, it acts as resistance. And once it acts as resistance, it will continue to do so. Obviously, eventually it pokes through, but a lot of times once that 20 becomes resistance, it stays resistance. Very, very common. Oh, Gianfranco, you're looking at the blue right now. Oh, I'll miss. You will miss. Okay. No, we might come back to it. It's just I want to just try some other things. That's all. Yeah, Donkey, just so you know, about 5% of the members of the brigade are female. So it's not all men here. Most of them are just too scared to comment. So, yeah, nothing wrong with keeping in mind that you should always respect other people as best you can, but still be yourself. Yeah, I agree. I don't think you're outright disrespectful to anybody. No, it's a matter of that moment where you realized that Archelion was a female, and then you were like, oh no, like I didn't realize I was talking to a woman this whole time. I'm just saying, always think about it like you don't know who's on the other end. You know. Okay, well we just pulled that POC lower here in the E period, which is a bearish signal. Also, keeping in mind the one time framing continued in the D period, it is likely to continue in the E. So we're looking to see, can this E period high stay below this D period high? If so, expect the market to continue to trend lower. As I say that, though, it does look like they're starting an uptrend in the ticks. We're starting to get higher lows in the ticks. So that is sort of the first sign that you see that the buyers are stepping in at lower levels. You start seeing a trend, and then out of nowhere they push higher, and then you look back at the ticks and you're like, oh, it's been trending for 2 hours. I didn't even notice. Nirmal asks, do you think we're building support at the POC to go higher? Well, we're not at the POC. We're below it. The POC is this green line here. And are we building support to go higher? Yeah, I think we are actually. With the ticks trending higher, the fact that we pushed above and pulled back in and then couldn't get lower, we could potentially be building some support here. So the things to watch are the ticks, right? If the ticks continue to trend higher like this, that is bullish. Okay, they're above the zero line now. The cessation of one time framing. Can the E period high get above the D period high? Yeah, I mean, pretty much those two are the only things you need to watch here. So the ticks, if you get the big red tick that breaks the uptrend that's happening here, that's likely to start to sell off. But if they can continue this pattern, then they might be able to get that E period above that D period, which would make the market go rotational. And then what I would think is on the next rotation down. So let's say the E period pushes above the D, gets 2 ticks above it. That's the cessation of one time framing. The next pullback into this should find support here. Okay. And then we just rotate. Also, just want to mention, it looks like a few new people have tried to sign up for the Brigade today. But of course, the website's not working right. So if you're one of those people, just look out to your email. Once I've got things working again, I'll shoot you an email and let you know to try again. Uh, 17 week plus poor low actually. 715. Yeah, I'm not sure what you're asking. Yes, it was a poor low. Ah. Now, Donkey, if you remember on that day, we weren't sure because you had said you undid your you undid your subscribe to redo it right on 1,000, but then he clicked it at the same moment. So we'll just never know who was number 1,000. We may die without knowing. Um, what is my NQ chart setup? I do 2 ticks on the NQ just because it's so much more volatile than the ES that I found if I had it in 1 tick increments, I couldn't really read the shape of the profile. Every profile just looks super elongated to me. So when I put it in 2 ticks, it looks more like the ES to me in terms of the shape of the profile. So that's why I go with the 2 ticks on the Q. Slade talked about something in the Discord group that I think is worth mentioning here. He just said, I can't fathom losing $200 per trade, like risking 20 to 40 on the NQ to make 100 to 200 per trade. Having to use a larger stop, I actually had to risk 300. 300 is a decent day. I'm a good trader, but small potatoes for now and happy being small. So that's a really good way to think about the markets, right? When you're measuring risk versus reward, if today the range that you would have to, so for example, let's say you wanted to go short right now, but you'd have to put your stop all the way up here. If that's too much risk for you, then don't get into the trade. No matter how much you feel right, like it feels like, oh, I'm right. The the market's definitely going to push down and repair this poor low. Even if you're almost 100% certain that it's going to go repair that poor low, if you would have to risk more than you're willing to lose, don't take the trade. That is one of those things that takes a long time to learn. And then the other aspect of that is it's okay to be a small trader. It's okay to focus on just making $100 a trade or even $100 a day and just master that skill. If, for example, you're trading the MES, just focus on making $100 a day, keep your trades small, and don't bring your ego into it. And then once you have a good win rate where like day after day you're profitable, you're making that $100 a day, then all you have to do is switch from the MES to the ES and instantly you're making $1,000 a day, changing absolutely nothing, right? So nothing wrong with, trading small and honing a skill and then sizing up as your confidence grows. But you do have to size up eventually if you want to do it for the rest of your life. Charles, Now Trader asked, Charles, why not go with 30 contracts, but only scalp 1 point a day? Because the risk is much higher, right? So yeah, if obviously if you have a big enough account size, you could go short with 30 contracts right now on the MES. I mean on the ES. And if the market just goes like a point lower, you could take profits and you'll have a killer day, right? Oh man, what a amazing trade it will be. So much money. You'll feel so good. But here's the question. What if you enter that trade and it goes the other way? What if you're wrong? Then you're losing that same massive amount of money you could have made. So that's not a good proposition, risk versus reward. That's why scalping is a very risky business. It's a very risky way to participate in the markets because you have to take on a massive amount of risk. Whereas if you just take a very small trade here and let it go way down here before you take profits or put your stop right there, well, then you're only going to lose a little tiny bit. But yeah, you're right. You have to wait for the market to push all the way down here to get your rewards. You don't get that huge reward with just a tick. But the advantage is you don't risk the same money. That's the advantage. Well, NavTrader, I would just tell you if that's working for you, if you're doing that, you're taking massively huge trades, maxing out your risk and then just taking one tick of profits and then being done for the day. If you're doing that and it's working for you, keep doing it. Sounds good. Certainly doesn't appeal to me. It also limits your reward, right? You can only ever make one tick with 30 contracts. That's the most money you can ever make. I like the idea. Part of what I like about trading is that it's a game. There's a scoreboard. The scoreboard is my P&L. And I want to score more points every day I play. I want to get better and better at it. So I like the idea of being able to hone skills and get better and then make more money when I do. NavTrader, if you're asking me, no, I don't ever think I'll be a 30 to 50 contracts guy. If I can get up to 10 contracts, I'd be a pretty happy camper. I mean, there's a lot of money to be made trading 10 contracts at a time. Okay, well, the ticks are continuing to trend higher as we push our way up towards that D period low. So let's see if that one time framing can hold there. Although to me, it does feel like the market's ready to go rotational. Let's see if they can hold up this trend. If so, we probably will. Yeah, Nav Trader, I hear you. I hear what you're saying. I just fundamentally feel exactly the opposite. Like, to me, if you only want to take one trade a day, you don't take a trade that's like massively risky where if it goes against you, you could lose just as much as you could make. If it goes for you, you want to take one trade a day as in like a swing trade type of way where like you go short, this morning when you break below the balance area low, and then you stay in the one trade and you make all this money on the way down, and then you stay in it, you get the cessation of one time framing. So your one trade was like here to here. But all you were risking was like this little tiny bit where your stop was, right? In my opinion, if you want to take one trade a day, that's the way you do it. You let time do the work and make you the money by taking the market where you think the market's going to go, as opposed to trying to guarantee that the market will instantly give you a win, right? To get that guarantee that say you're going to go short for that one tick lower, to get that guarantee, you have to risk that it could go one tick higher. So you have to risk as much as you could potentially make. How many trades in a row do you think you can do that for? You go 30 contracts. Somebody should do the math. What is 30 ES contracts at one tick, including the fees? But anyway, like if you're wrong and the market goes up a tick, you lose money. So now you got way less to trade with. Market goes up another tick, you lose more money. You've way less to trade with. Like, it's so risky. Whereas like this system of taking a trade where you're only risking a tiny little bit to get a lot, you can be wrong, 50 times in a row, and you've still got capital to keep trying. Whereas this system of one-to-one risk reward, like eventually you just run out of money. So anyway, that's just my opinion. But like I said, if it's working for you, by all means, keep doing it. 1.96, same thing, right? Oh, one more tick. One more tick. All right. That is the cessation of one time framing. The F period was able to get 2 ticks above the E period. So the market is now likely to go rotational, meaning it goes sideways. What are we looking for in a rotational market here? Well, to the upside, we got these single prints from the B period that are left behind here that need to be backfilled at some point today. So as the market trades its way up into those, we're looking for resistance. Me personally, I'll be waiting till we get above the value area here and looking for resistance up in there to short it back to the POC. Okay. Also, the halfback could act as resistance as well, which is just at the high of the value area. And it perfectly lines up with the POC from yesterday. So there's lots of resistance in here where the market could push up into it and then rotate back down. So I'm keeping an eye on that. To the downside, very, very thin. So this is basically the area that I would be looking to go long normally, but because it's so small, there's such a small range. To the downside, I'd probably be more focused on either this node of volume. If we can't get below it, I might go long for a trade back to the POC. Or if we do, I'm looking to repair that poor low, then get the rotation. Okay. So the market is rotational. Take me, baby, one more time. All right, I'm going to try to work through this. I'm reading your comments here, Nav Trader. I'm going to try to work through this because I want you to understand this from my perspective. And so for the rest of you, if you're not interested in hearing me talk about this, just mute the volume for a few minutes here. Okay. So let's say you have $100 in your account. That's what you have to trade with. Okay. And let's just say, hypothetically, 30 contracts going short, 30 contracts, 1 point or another is like $20 worth. So to look for a short or to enter a trade, if it goes your way, you make $20 in profit. Okay. But if it goes against you, you lose $20, right? That's basically the idea. So every trade you enter into with a 1-to-1 risk reward, you're potentially losing 20 to make 20. Okay, great. So let's say you enter the first trade. Man, it's going to become hard writing it out like this. But anyway, you enter the first trade, you got $100. Let's say you're right. Great. You got 120. Okay, let's say the next trade you're wrong. You're back to 100. Let's say the next trade you're wrong. Now you're at 80. Right? So then the next trade you're right. You're back at 100. But then you're wrong 2 more. You're back to 60. Well, then you're right again. You're back up to 80. Do you see how slowly over time you would have to be right more than you're wrong? Because if you keep being wrong twice and right once, eventually you're going to run out of money. Okay, so you're wrong 2 more times from 80. Now you got $40. So you're right again, you got 60. Then you're wrong again twice, you got $20. Then you're right again once, you got 40. Do you see what I'm saying? So the only way to make money with a system like this is you have to be right most of the time. You have to be right twice, wrong once. That is very, very hard to do. To have a 70% plus win rate is extremely hard to do. In particular, if you're talking about over a lifetime, if you're trying to become a professional trader who does this for a job every day, having a 70% win rate every day is really, really, really hard. And that's what you would have to do to make money with your system, with taking a 1-to-1 risk reward. But now let's look at it a different way, right? Let's say you got $100 and you're taking a trade where you're risking, if you're wrong, losing $5. But if you're right, you make $15, right? So you got a bigger reward than risk. Let's go through the same idea. First trade, you're profitable. You've got 115. Second trade goes against you, you got 110. Third trade goes against you, you got 105. Okay? Next trade goes for you. You got 120. Next trade goes against you, you got 115. Next trade goes against you, you got 110. Next trade goes for you, you got 135. Does that make sense? So literally winning and losing the same amounts. Winning 1, losing 2, winning 1, losing 2, you end up with more money if you have a higher reward than risk, whereas when it was 1-to-1, you ended up with less money. Does that make sense? Yeah. I mean, Donkey's got a point. I'm sure there's programs you could plug it into. I'm just trying to make it super simple so that you can understand the conceptual idea. That if you're winning larger amounts than you're losing, you don't have to be right as much. You can be wrong more than you're right and still make money. No, I wouldn't, Nav Trader. I get what you're saying. You're saying that if all you had to do was take one trade a day, wouldn't that one trade probably be profitable, 75% of the time? Which is what you would need in order to make money doing that. Maybe, but again, I don't think so with those parameters. What you have to understand about a single point, a market can go against you by a point instantly. I mean, even if the market's in a liquidation break where it's falling like a brick, it can pull back by 1 point at any moment. So the odds of you being right, if you're only giving yourself 1 point, the odds of you being right are less than 50-50 just because of the randomness of the way the market moves. So how you could assume you'd have a 75% win rate when you're doing a trade that's like almost impossible to get better than 50-50. I just don't understand, how that would work. Does that make sense? Like your idea is that if you only take one trade a day, you're guaranteed that trade's going to go your way. I'm saying if you're only risking 1 point, if your stop is $1 from your entry, that alone will make you wrong most of the time. Like it's just too tight. So, but again, open a paper account, try it every day for 2 weeks and see if you have more money than you started with. I guarantee you won't. Yeah, so NavTrader, on your comment of the problem that I'm facing is the small size. I make more trades. That's what I was talking about earlier. When Slade had mentioned that he's okay with trading small. That's if you're still learning, don't worry about making enough money to pay your bills, right? Like If your strategy is to go 30 contracts for 1 point, just do 30 contracts for 1 point and take one trade a day, whatever the system is. Just do the system. That's how you find out if it works or not. As soon as you start saying like, oh, well, the system works, but because I'm not making enough money fast enough, I have to do more trades. And so then the system doesn't work. No. Either the system works or it doesn't. If you're not making enough money right now because you're trading with smaller size, that's fine. Don't try to make more money. If make your goal $10 a day or $100 a day or whatever, make your goal smaller, but work on the system, work on trading. If your point is to only take one trade a day, only take one trade a day. That's you stick to the system. And then once you've done that for 2 weeks, 3 weeks, a month straight, every day, you're just taking one trade with massive size. You've got a good win rate. You're profitable. Then you switch. Then you start getting bigger with size. And that's when you make the money. Yeah, Marco, that's one that's, it's to each their own. Some people setting a daily goal messes them up because they feel pressure to get to it if they're not. And so they take trades they shouldn't take. Or if they get to it, they stop trading, whereas they should keep going because they might make more money if they kept trading. But then for other people, it's really helpful to have a goal. So it just depends. Everybody's different. Yeah, Nav Trader, these are the conversations I love to have because these are the things that I had to figure out the hard way all by myself for years and years and years by doing them. I'd think, ooh, yeah, look at this. Only 1 point once a day, but with massive size. And then I'd try it and lose a bunch of money and then figure out, oh, wait, that doesn't work. So, JL, who's who? Am I Kramer? Who's who? I'm so happy to hear that, Marco. Okay, so as we're pushing our way up here to the upper end of the value area, I'm just watching those ticks for that big red tick that breaks the trend up. Looks like the NASDAQ wants to do it right now. But that big red tick will probably lead to the rotation back down to the POC, where the two-way auction process will start again. If not, they're still trying to backfill these single prints. Okay, so obviously that's the big red tick and the rotation back towards that POC. So now it's starting to feel like a options expiry Friday. Slow, slow tempo, lots of grinding, staying stuck in a range. Super exciting stuff. Well, Arthur, it kind of depends what time frame you're looking at here. Um, as far as what's happening here today, um, at this point, it's just rotational. I know it drives people crazy when I say that. When I say the market's not trying to do anything right now, it's just rotating. It's just letting the short-term traders pick each other's pockets and do what they do while it waits for a bigger decision to be made. Okay? That's if we're talking about right now, like over the last hour or two, what's happening. But if you're asking on a larger term basis, um, I don't think anything's keeping the market down. We made new all-time highs 3 days ago. So I would certainly not call this the market being kept down by anything. Looking at this profile here, it's jumping out to me right away that this is a B-shaped profile. B as in boy. And what a B shape tells us is that it is more long liquidation than new money selling, piling on here. So meaning a lot of the volume that we're seeing down here was these people, either people that went long yesterday in the market or people that went long overnight last night, which makes sense. This morning we said the overnight inventory was net long. So there was a lot of people that went long in the overnight. And so let's just stretch out the profile just to give you guys the visual. Expand the profile. So imagine, these people that started buying these dips on the way up, right, to push the market up here. They're the ones who exited as the market was pushing down. Okay. Which got us down to this level. And now it's just rotating with two-sided trade. So what's the alternative, Charles? Well, the alternative is, these sellers liquidate their positions, bringing the market down to here, and then new sellers pile on and keep pushing it lower. That is the alternative. If you get that, you get an elongated profile. So you get a profile that's like little random nodes of volume that kind of pop up on the way down like this. But instead, we have a giant B shape where most of the volume is all at the bottom. And so that tells us that it's not new sellers piling on. It's just the old buyers exiting their trades. Okay. I mean, if you forced me to speculate on the close of today right now, I'm sorry to disappoint, folks, but you know what I'm going to say before it even comes out my mouth. I'd look at that POC. Oh no, he said it. Down with the POC. Yeah, I would say probably you're looking at somewhere between where the POC is and this node of volume would be my guess. This is what I was talking about this morning when I said that sometimes on an options expiry Friday, you get really slow, grindy, muted days where the market kind of goes nowhere. Literally from the moment we got the cessation of one time framing in the F period, we had like one more little push higher where things were exciting for a minute. And then from there, it just clicked into this like mode. You could just tell it like the tempo suddenly slowed down. The amount of volatility suddenly came to a screeching halt. And since then, we've just been doing this slow grind. So the market is rotational. Play it like a normal rotational day. Resistance above the POC should be shorted back to it. Support below the POC is a long trade back to it. It just might require some patience. You might have to sit in it for a while. But it will keep coming back to that POC. Design knob, dude, nothing would make me more upset than that. If the market traded its way all the way up to the high and closed right here, I'd be so angry at the market. I'd be like, what is your deal, market? Get your ish together. Also worth noting, don't lose sight of the value area. The single most valuable part of the market profile is that blue shaded in box. It's a very reliable signal for a larger change in trend. And so we had yesterday, value was lower. Today, value is overlapping to lower. So that is a sign that the trend on a longer term basis is starting to pull back here. And we had a good high at that all-time high, good excess. So I'm not saying this is the high, but that it could be. I'd really love to see this gap fill. Not today, obviously, but next week. Israel, I think so. I mean, that's just the way I'm observing the market generated information. But yeah, I just know in the past when I've ignored value, a day or two later, I've regretted it. Value is a good signal. Having this one day with value lower, that wouldn't get me too bearish, right? If we'd had, value lower yesterday and then today it was just inside of yesterday's range or it was overlapping to higher like it was this morning, this pullback I wouldn't care, right? But it's the fact that it's now trending, that we now have a third day in a row where the value is lower, right? That's where you start to go, Is this the beginning of a larger trend? I must be open to it. Mudra, yeah, I use it on rotational days like today, literally right now. I'm looking for the market to get above that value area before I enter a trade, right? I don't want to go short inside of here. It just is a less probability, less likely to work out. But if we get above that blue box, above the value area, and then we find some resistance, that increases the odds that the market needs to pull back down into value here. So I would be going short above that. So I wouldn't go short at the value area high, but I would pay close attention to where it is so I see what happens to the market when it gets above there. All right, guys. Well, as always, excuse me, as always on a rotational day, as we work our way below value, we're looking to find support for rotation back up to the POC. But here today, it's going to be a little bit trickier because we have such a tight range here above the E period high and I'm sorry, below the E period low and above the D period high. This is the area, literally these 4 ticks is the area we would normally be looking for support. So it's going to be a little bit trickier here today. The I period might not be able to get down below value. So that's the first idea, is it just pushes back right now. The other idea is if it gets down here, it could potentially break out to the downside. So what that would look like is it would get 2 ticks below the D period low. Then it would try to pull back in and it would find resistance. It wouldn't be able to get back up in here. That would be a sign to short it. The first target being that poor low. But like I said, if they take out that poor low, they could need to head further to fill that gap. Okay. So you monitor for continuation from there. Another option that is doable, that's worth keeping in mind, is if you repair the poor low, so you work your way down, you get a few ticks below here, that brings in the buyers for the rotation back to the POC. So if that were to happen, essentially the market would push down, come back up, and it would not find resistance here. It would just push right back up into the range. Okay. Now that I'm thinking about it, I would just play it as if this poor low is the low of the D period. That's the way I would treat it. So I would wait until you're below the poor low to look for the breakout. You could look for support anywhere in here and still expect the rotation back. But if you push below yesterday's low, come back up and find resistance, that's the short. Or if you come back up into the range, that's the long right there. Drawing look like a Twinkie. There's a classic reference for you. I mean, it can be tricky. When you ask the question, what am I looking for when I look for support? The overly simplified answer is I'm looking for the market to try to go down, and it can't. Right? It gets to a certain point, and it keeps pushing at that. I mean, you can literally just watch this thing. It'll bounce. It'll bounce. It'll bounce. It's trying to get lower, and it just can't. That's support. But it's very arbitrary. You must just watch the way the ticker moves and get a feel for it. You can also look for nodes of volume. So like, let's say the volume's tapering down here, but then right here out of nowhere, you get a big fat thing of volume. That could be support building up right there. So volume is another way to look for it. Tempo is another way to look. Oftentimes, if the market is pushing to the downside towards a level, it'll go like kind of quick. And then it'll get down there and it'll just kind of slow down and it'll stop. It won't necessarily go up, but it'll just kind of slow down and start moving a lot slower than it was moving just a minute before. And then you know buyers are stepping in. Buyers are stepping in. Oh boy, it's Friday. I'm ready for a weekend, guys. Whip it. Donkey, what do you mean pirate picture? Is it in the Discord? Gorgeous. Just gorgeous. There you go. Maybe I should switch it on the actual website. I'd have to get a much more foofy hat than that. Something with a giant feather hanging off. Uh, I love it. Jonathan, if you're in the room listening, um, give me like a couple minutes. Let me log in and figure out what's going on with your account. Why you can't get in. Uno momento. Okay, so the J period working its way below that D period low. So I'm still seeing it as potential support. Like I said, I'm going to treat it as if the poor low is the low of the day. So finding support anywhere in here is good for a rotation back to the POC. If not, we need to get 2 ticks below that poor low, repairing it, and then we look to see what happens. Does it try to push back up into this range and it finds resistance? If it does, look to go short. Or does it have success? It can break back up in here. If that's the case, look to go long for the rotation back to the POC. Okay? Okay, so that poor low is repaired. And right now they're pushing back up into yesterday's range. Or, sorry, today's. So at this point, volume piling on here is actually more likely probably shorts piling on for the breakout to the downside. So if you're bullish here and you want the market to go up, you don't want it to spend a lot of time or put a lot of volume in right here. You want it to just immediately start to push its way back into value. That would increase the odds that you're getting that rotation up to the POC. Whereas if you start to build a bunch of volume right around here, that is likely sellers piling on for further downside continuation. That is the resistance I was talking about. If you come down, come back up, and you can't get any higher, that is how you will see that happening. Kathy Penn, any support for NQ? Yeah, I mean, there's lots of space for support here on the NQ. Yesterday's low could act as support, coming down there to that level. Just above that, this little node of volume from earlier today could act as support. Looks like you may have a weak J high. Yep, you do. Yeah, so I mean, as far as finding support, you don't really need any specific level here. The market is rotational. You got a lot more space down here than we have in that low that we had earlier. So the market should have no problem finding support down here at the lower end of value. If not, look for the breakout to the downside. Back to the ES. Okay, so the ticks are pushing higher. We're above this little node of volume we were forming here. That could have been the resistance. So it seems to me this is setting itself up for a rotation back to the POC. It's good taper on the low. I don't love the 57 contracts. I prefer if it was more than 100, but that's no big deal. Otherwise, it's good taper. So I'm not saying that this is the low of the day, but I'm saying if it was, it would be a good low. All right, well, there's your first pink candle of volume down here for the breakout to the downside. It also looks like the ticks are having a hard time trying to get back above the zero line, which is a sign that there is more sellers than buyers in the market. So building up a note of volume, knowing that it's more sellers than buyers, in my mind, increases the odds the market is not ready to find support just yet. It might need a push lower. To me, the most obvious next support is filling that gap. Now, if the ticks can get above the zero line, then that is a sign that the buyers are stepping in here for the rotation back up. But as long as it stays below, it's like right on the line right now. As long as it stays below, it's more sellers than buyers. So keep that in mind. All right, well, there you go. Buyers won. Ding, ding, ding. What did they get for their win, Charles? A push higher. All right, let's take a look at the NQ. Yeah, beautiful rotation. Beautiful, gorgeous, rotating market. Just wants to repair that weak J high and then go to the POC. Keep an eye on that 20 moving average if the market pushes its way back up there, likely to act as resistance. But otherwise, she's rotational. Is there a double distribution on the NQ? Yeah. Yep, that all fits the B shape. So again, the B shape basically just tells us that the pull down here was not new money sellers piling on trying to push the market down. It was just the people that went long in here getting squeezed out of their trades. Okay. So once we pulled back down to take out all these buyers, it's just been rotational. And that's what I mean. It's just normal rotation. Look for resistance here. Look for support here. So normal, your question is there possible resistance at 4337? Um, I think the answer that you're looking for is you're looking too hard, right? When the day is rotational and the market is inside the value area, there's really no point in trying to figure out where it's going to stop and reverse within the value area. There's really no point in trying to figure out, is this resistance? Is this resistance? Is this resistance? Like, it's just, you can do it and there'll be times where you'll be correct. But in my opinion, you'll end up exerting so much effort trying to figure those things out for very little, positive end result, for very little money in your pocket at the end of the day. That's why the way I trade rotational days, I wait until it gets outside of that blue line, that blue box. Then I look for resistance or support, right? I don't try to figure it out inside of there because I'll just go nuts. I'll never be able to do it. And every day I'll get more and more frustrated and I'll say market profile doesn't work and I'll get all upset when the truth is it's just totally random. Guys, half the people think the market's going to go up, half think it's going to go down. So it's going to go both ways, and it's going to just totally randomly stop and reverse, right? So trying to guess where support and resistance is inside of a rotational day, in my opinion, is a waste of effort. Instead, just relax. Do something else. Don't think about it. Don't worry about it. Who cares where it's going to reverse? Have a system for trading it where it doesn't matter where it reverses. Your system allows you to trade it anyway. For me, that system is go long below, go short above. Don't try to take trades in the middle. Like, it's every day that we have rotation, I have to keep explaining this to people. Don't try to guess what it's going to do inside of here. You'll go nuts. You'll keep asking me every day, wait, is this resistance? Is this support? Is this that? Who knows? Who cares? It's just going to keep going up and down. What matters is what it does when it gets outside of that blue area. That's when it matters. That's when the market is in a place where it has to make a new decision. There has to be some kind of change in the market. As traders, that's what we're looking for, is a change in the market. So if the market pulls its way this far away from the POC, gets out of the value area, it's got two choices to make: go back or break out. So from here, it's a good idea to start exerting mental energy trying to figure out what the market is doing, because there's a really good opportunity. The opportunity is either the rotation back or the breakout. But anywhere in here, you're just wasting time and energy trying to find trades. That's just me. But I'm going to keep giving that answer. No matter how many times people ask me, I'm going to keep saying, don't look for support or resistance inside the value area on a rotational day. You're wasting your time. Rotational days are the easiest to trade, even though they're the hardest to read. They're very, very hard to read. It is extremely hard to know where the market is going to turn around. But it is really easy to trade it if you don't try to know all the time and you just trust the probability. Just trust the probability. Great. So normal. So you went long below value. Okay. So now there's a way you can trade it so that you don't have to worry about the resistance. What do you do? So let's say you went long right here. Whoops. You went long right here. Market pushes its way up into value. It's starting to get up here. It's hitting some resistance. You just move your stop right there. Right? Now, who cares if there's resistance here? If there's resistance and it pulls back down, you take a little bit of profit and then you re-enter the trade once again right here. And if there isn't resistance and it keeps pushing, you stay in the trade to the POC. So that's the point that I'm trying to make. You create a system for taking trades where it doesn't matter what happens inside this area, you'll still make money. All right, so here we go. Let's see if they can do it this time. Get the breakout to the downside. There they did. So now, once again, the target is the gap fill at 43.22. First, they got to push up, backfill those single prints. So now this level should act as resistance here. This is where the battle was done before, and the sellers won. They were able to push us down to here. So now this should act as resistance on the way back up. Okay. All right, guys. Well, I put myself as feeling neutral here. I'm really more bearish in that I think the market's going to trade down and fill this gap. I just don't know that we'll have much more further downside continuation beyond that. That should act as good support. So I don't want to go outright bearish here, and then the market trades down just a few bucks and finds support. So I'm just going to say neutral, but I do still think we need to get down there and get at least 2 ticks below that gap. Oh, no, I'm sorry. It's a gap. So just get to it. Just get right to that 43.2275 level. Okay, once you get there, likely you find support for a push back up into value. Okay, it's worth noting that gaps often don't fill right away. They often take a bit of a grind or a couple of attempts to fill them. So I'm noticing that we're building volume right here at the top of that gap. So that is, again, we've talked about this so many times before. When you're breaking out to lower levels, piling on volume is likely sellers piling on, because if buyers are piling on, they'll push the price higher. So keep an eye on the ticks. If they can't get back above that zero line, I think we still need to head down and finish filling that gap. If the market is able to push its way up, like to get me long here, the market would have to get above this node. Because there's only 500 contracts here, the market might need to come up and just backfill that before its next major sell-off. So if the market can get above that level, I would look to go long for a rotation back up to the POC. But I'd wait and see what happens when we backfill those levels first. Okay? Although literally as I'm speaking, it looks like it's trying to go fill that gap. Yep, tick still stuck below zero. Design knob, load the boat at 4322. Yeah, I would definitely get into a long trade there, but I wouldn't load the boat. I'd wait to see what happens when we try to backfill these single prints. And then, like I said, that little node of volume right above them, that's the back up the boat in terms of safety of the trade. You get back up above this node of volume, you're likely heading to that POC. Just a few more ticks to fill that gap. Why is there a lack of large time frame traders on Friday? Well, I do think right now there are larger traders trading in this market. We haven't really created that many weak references. So the way the market's been pushing lower is an indication of people sort of laddering into shorts, as opposed to just like the way short-term traders do it, where they just instantly go short all at one level. This does feel more like a market where they've been slowly piling on the shorts. So I do think there are larger players participating here today, but of course that's just a guess. To answer the question of why there's less of them on Friday, who knows, man? Maybe they like to go home early. You know, if you were a millionaire, you might think, oh, you know what? I can take off at noon on a Friday. Okay, so the gap is filled. So that should start to bring in some buyers. We should see those ticks start pushing their way back up. If not, further downside continuation. Got a node of volume from the 8th, just below this week M period high, which is the next market profile reference below us. So that could be support just below there. If not, this node at 43.07 could act as support. Less fuel. Yeah, me too. A gap and go scenario would have been extremely bullish, but they filled that gap. They didn't find that support. So the market did what it wanted to do. Market do what market do. Can't be telling the market what to do. Doobie doobie doo. Donkey banner turned red. There's the bottom, folks. It could be that that's the bottom. I mean, right now at this moment, you're at that gap fill. So you could technically be finding support there, but look at those ticks. Oh, no, they're starting to trend up, actually. They were a second ago, it was like down here. So we'll see. Does look like buyers are reloading. Yeah, I mean, there should have been buyers stepping in longer term, stronger hands buyers stepping in here. Let's look for those ticks. Tickety, tickety, ticks. Okay. Decent taper on the low. All right, guys, well, getting those ticks back above that zero line has me feeling neutral here. Not sure if we'll make it back up to the POC, but we should drift back up into value. And like I said, if we can get above this random little node here where there's super low volume and that doesn't cause resistance, I think it's safe to say that the low is in for the day. Okay. Like I said, don't know how much more upside continuation we'll get, but we shouldn't need to sell off again. First order of business, backfill the K period single prints, backfill the volume here, and then it's green lights, baby. Bye-bye. All right, guys, the M period is upon us here, and the market is pushing lower. Those buyers must have dried on up. Okay, so as I discussed before, value still overlapping to lower. And that's a little bit bearish going into next week because we now have a trend of value being lower. Filling that gap should have brought in some longer term traders, some bigger money traders who would have bought that with a little more confidence. So to me, it's a bit bearish that they didn't step in here. Might be worth keeping an eye on the 20 moving average on the daily chart at this point. If the larger players didn't step in on that gap fill, perhaps they will step in on that 20 daily moving average if we get down to there. So currently it would be about 4308. Could also be that this is just a larger balancing area right here for the market. Right? It gets into these balancing areas. Looks above, fails, trades to the opposite end, looks below, fails, gets up to the upper end, pushes down, fails below, pushes back in, right? Then it finally gets its breakout with some excess. And then we do it again. Arthur, let me ask you, what do you think is going to happen on Monday? And why do you think that? If you had to guess, if I put a gun to your head and I said, Arthur, tell me right now what's going to happen Monday, what do you think would happen and why do you think it's going to happen? Okay. Well, design knob, you're definitely going to be right. But nobody else gives suggestions. Arthur, I want you specifically to think to yourself what's going to happen on Monday and why, and then let me know what you come up with. This is a teaching moment, and I can help you here, but I want to know what you're thinking first. Okay, great. You think there's going to be a gap up. Why do you think that? Okay, so a gap up that fails and then it sells off. Why is it that you think that's what's going to happen? A high, no, that it doesn't work like that. Counter auctions are from the overnight to the regular trading hours, not vice versa. So, I mean, I suppose they could have a little bit of like a short covering rally. Anybody that went short in the overnight taking their profits potentially. But other than that, no, there wouldn't be any kind of counter auction. Okay, well, Arthur, you haven't got back to me, so I'm just going to kind of try to get to my point. So, what I'm trying to teach here with this YouTube channel and with the Brigade and everything else is I'm trying to teach you guys to think for yourselves. So, I really don't like questions like, I think we are still in a bull market. Okay. I don't like questions like, what's going to happen on Monday? Or like, is it going to go up or down? Because first off, that's not going to help you at all as a trader. And second off, that's not how I think. I don't think like that. So, like, I can't answer your question because I wouldn't even know, is it going to go up or down on Monday, right? The way to think about markets is to always consider three possibilities. It could go up, it could go down, it could go sideways. Now, I know you're thinking that's too simple. Of course, it can always do one of those three things. And then asking yourself, what would it look like if it did those things, right? So if the market was going to sell off Monday, why would it do it? Okay, well, we got, one time framing lower here. We got the value lower. So we got a trend that's pushing the market down. We had a great spot for longer term, stronger hands traders to step in on that gap fill. They did not, right? So that's the idea, is you start to build a narrative of like, okay, here are the reasons the market could go down, right? And then you start to build a narrative for why not. Well, we're close to that 20 moving average on the daily. So maybe we just need to pull down to there to bring in the bigger players, or whatever the case may be. Maybe we just need to go sideways. Right? You come up with narratives like that so that when you go into Monday morning and you look at what the overnight did and you're trying to decide what's the market going to do today, you already have three possible scenarios. And then you can measure against what happened with the overnight, which is most likely to take place. Then as the day opens and new information starts to come out, like this morning, somebody mentioned in the comments, it looked like it was going to take off. It looked like it was going to shoot up like a rocket ship this morning. But then new information came in when we broke below the previous balancing area. Okay, new information came in and then the market sold itself off. So you can't ever guess what the market's going to do ahead of time. You just come up with your best potential options and then you constantly weigh what's happening in the market against those ideas. I know that doesn't help you right now in this moment when you're just wondering, what do I do on Monday? Go long or short? But the answer is, don't go either until you know what the market's doing. You won't figure out what the market's doing by just asking somebody else to tell you. You must think for yourself and learn to be better at reading the market by asking the question and then seeing the result. So maybe the first day you're way off. The market doesn't do anything you thought. And then the second day, wait, it kind of did what I thought it could do. And then the third day, oh, wow, I saw this as a potential and it did exactly the thing. A murder bot. Da-na-na. Okay. Sorry, I got stuck in my lecture mode. But I love you, Arthur. I'm happy to have you here. I'm not trying to be negative. Just trying to help you, because you've asked me that pretty much every weekend since you started coming here. What's going to happen on Monday? Is it just me or did the volatility slow down with the Murderbot? What's the deal, Murderbot? Okay, so right now we're in this node of volume from the 8th that could act as support. Also back here on the 6th, same area. So this could be support for the market. If not, the next node is down there at 4309. Yeah, Arthur, that is a good analysis there. Though I would only change the phrasing of once you break through the 20, it becomes bearish. Because by the time it gets to the 50, it could find support. Right? So if the market trades down to the 20, bounces a little bit, and then it pushes through, that's the moment it's bearish. And it's bearish from there down to the 50, where it looks for support. It doesn't become bearish at the 50, because that's often where the buyers step in. Okay. Correct, Jonathan. I was saying it's not bearish at the 50. It's bearish if it breaks below. But at the 50, it could be bullish. It could bring in buyers. All right, Murderbot trying to get up there. Backfill some of these single prints. All right, Pavel, enjoy your weekend, brother. Arthur, always better luck next week, right? If you learned a lesson this week, you'll be a little bit better trader next week. Oh, yeah, Jonathan, do not get me started with Peter Schiff. I hate that guy. I hate him with a passion. He's the king of that. He just always says the world's coming to an end, buy gold. And then, like, the one time the gold ran up, he was talking like he was a genius. Yeah, no, I hate that guy. I remember this was a while ago. I was like blown away when I figured out. I mean, it seems so stupid. It seems so obvious. But I figured out that a lot of those people on Twitter, the way they do it is they just post tweets like every day, guessing what's going to happen with the market. And then what they do is they just go back and delete only the ones where they were wrong. And so you might find somebody on Twitter and be like, oh, wow, this person's like, they're really on it. Like every day they're right. And then like, they're wrong a bunch of times as you're following them. And then you realize, oh, wait, they delete the ones where they're wrong and they only tell you when they're right. There's just like so much of that in this industry of people who just try to convince you they know what they're talking about when they really don't. Slade, I like how you went into self-defense mode. I wasn't talking about you, bro. I was talking about other people on Twitter. But now I feel like now I feel suspect. Now I feel like we have to start taking screen grabs of your calls. All right, guys, the market is closed. It was 43.19. So there you go. Good luck to the overnight traders this weekend. Have fun with that. We'll use their decisions as a framework for us moving forward Monday morning. I look forward to seeing you all here then. Have a great weekend, everybody. Thanks a lot.